Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 3rd of January 2021. And we have, after a couple of days delay, our gold price forecast for this year. So here goes. Now, before we go into our forecast, if you haven't already done so, please listen to yesterday's video entitled Why Gold Could Double in 2021, because it will set the scene for part of what we're going to cover today. It's not, in fairness, what we expect to happen this year, but if precious metals analyst Andrew Maguire is right, and we do not think his conclusions are, though his analysis appears to be, but although we do not think his conclusions are, if he is, then we will see gold rise significantly up to twice the current price. Also, for next week's prediction of what we think is going to happen to gold and silver prices, please take a look at our Gold and Silver Weekly Update, which was published on Friday, and we've placed links to both of these two videos below. Okay, going back to our gold forecast for 2021. Firstly, let's give ourselves an escape clause right at the start. Might as well, we'll be accused of it, so we'll say it up front. To predict any price of any commodity up to 12 months in advance is, without some form of godly omniscience, an impossibility. Unless, of course, you own 100% of that commodity and you're in a monopoly position and therefore can dictate the price. Where precious metals are concerned, it's even worse to some degree because there are multiple reasons why people purchase precious metals. And in the case of gold, it's used for finance and investing, both in physical and paper form and now potentially in digital form too. Dentistry and medicine, electronics and computers, jewellery, and even medals and statues. Not forgetting the spirit of ecstasy that some Saudi Arabian princes have on their Rolls Royces. In other words, there are multiple applications and uses for gold. But it would be fair to say that of these, perhaps the largest component really is finance and investment. Then, there are so many factors which affect its price, including, and arguably the more important, the value of the US dollar, mine supply versus physical demand, its own price. Of course, demand increases, particularly in the Far East as prices decline, speculation, often conducted through paper trading markets, but not exclusively, the value of competitor products, e.g. equities, cryptos, bonds, and in some cases even silver, although that's a much smaller market. Real interest rates and inflation, global geopolitical events, and our proverbial but not often used recently, black swan. So for anyone to be able to calculate all of this anywhere near accurate is some achievement indeed. Now, we have to admit that we're quite proud of our weekly updates because, having gone through them for the year, our weekly forecasts are approximately 85% accurate. Albeit, we admit we're quoting a modest band range for prices. But most technical analysts would die for that sort of record of 85% accuracy, and especially in a marketplace that has been so highly volatile. Now, generally, our annual predictions too have been quite accurate within a relative small percentage, and compared to a number of pumpers that even some on this channel like to follow, Chef Morgan, just clearing my throat, we have been considerably more accurate, and especially those who've been quoting $5,000 and $10,000 gold literally for over a decade now. Now, in 2019, our calculations were actually marginally over-optimistic, which we know will surprise many. But this year, when we produced our forecast, which was on Sunday the 9th of February, when the coronavirus was known of, but certainly underplayed by major politicians, and not anywhere near the concern about it we have today, the gold price then stood at $1,568 an ounce, and this is what we quoted at that time. The one thing we can say with some degree of certainty is to forget $5,000, $4,000 and even $3,000 gold. However, we would not completely rule out $2,000 gold, especially if the coronavirus is not contained and or if the Iranian situation actually becomes substantially more active and serious. Taking all of the financial data into account, including technical analysis and factoring in potential black swans and erroneous geopolitical crises, we can see this year gold moving between a low of $1,400 and a high equivalent to 2012's high of $1,791 or just shy of $1,800, settling at the end of the year between $1,650 and $1,750. Now, of course, the gold price actually closed at exactly $1,900, up just shy of 23% for the year. And our closing rate of as high as $1,750 was only 8.5% out. And the year's low for gold was $1,472 compared with our forecast of $1,400. So we do not think we did too badly. But all of that is now history. What now exercises us is what is likely to happen in 2021. Well, our answer to that, of course, is determined by which part of 2021 we're talking about, and of course what are the geopolitical elements as well as financial ones likely to play out. So, we closed 2020 at $1,900. The trend normally is for precious metals to do quite well through January and February, peaking then normally very early in March and then falling off again, and then to come back a few months later. Now, this doesn't happen every year, but it's certainly been the trend of recent years. Now, 2021 is special because, of course, a new administration is likely to take over. Now, we know many listeners will not wish to hear this, but we are 100% confident that Biden will be inaugurated on the 20th of January. Not because we're a Biden supporter, but even contacts of ours and others in the White House tell us they know the game is up, but they're playing the system for all that they can to keep the funds rolling in and to build a war chest for 2022 congressional elections and 2024 presidential elections. Now, a Biden presidency will likely incur more stimulus, and especially if the Democrats win the 2 Senate seats in Georgia on the 5th of January, which is a much closer race, to be frank. It will prove more difficult to extract significant funds if the Democrats don't win those 2 seats, but we suspect that a Biden presidency will still be more stimulative than under Trump's presidency, which frankly itself has proven somewhat largesse on public spending grounds. Now, this will serve to some degree to both undermine the dollar, but also short-term to boost equities, though that chicken will eventually come home to roost. The issue is when. We're also likely to see minimum wages being raised in a number of states, green energy being pushed, and investment incentives to advance it, and further support checks until the coronavirus pandemic is eventually under control, which in our view is not going to happen anytime soon. And we're not really expecting herd immunity to kick in until sometime in the autumn, if not later. Obviously, we hope we're wrong, and it's much sooner than that. We can also expect the Fed to be further supportive in its QE efforts, and this will keep pressure on the dollar and act as a tailwind for gold. But that said, we still have to bear in mind that gold advanced 23% this year, and that has been an excellent year for the precious metal. If we look historically, after the collapse in 2008, gold went up 27.6% in 2009, 27.7% in 2010, and only 11.6% in the year it reached its then all-time high of $1,896. In fact, since 1979, gold has only once had a higher growth rate than these figures, and that was in 2007, just before the economic crash, where gold rose 31.6% for the year. So although what I'm going to do now is not scientific per se, if we actually took the highest annual growth rate since 1979, which was an exceptional year, and applied it today, gold's maximum for 2021 would be $1,900 times 31.6%, which would give us $2,500. And if gold rose the same percentage in 2021 as it did in 2020, in other words 23%, we would see gold at $2,300. Now we accept that these are growth levels for the year and not necessarily peaks reached for the year. But for us to see gold rise again this year by a similar percentage would in fact be difficult, especially bearing in mind, quite frankly, the devastating economic collapse witnessed as a result of the coronavirus pandemic this year. And we just don't see that level of collapse repeating itself. With vaccines now being rolled out, albeit slower than originally estimated, it is difficult to see a deterioration of economic performance to the same degree we've already witnessed. That said, we do have to take into account, of course, the issue of a deteriorating dollar and any potential inflation likely to be encountered this year. Well, most of the economic forecasts for 2021 are broadly predicting small or benign inflation, with it beginning to pick up into 2022. And we cannot argue with that, except perhaps we may see a pickup towards the end of this year, but not sufficiently to have any significant impact. Now, the past couple of months we've highlighted predictions by a number of banks and financial institutions which have broadly assessed 2021, seeing a gold price of $2,300 at the top, Goldman Sachs for example, and others seeing the price average out at any price between that figure and $1,900, with the odd exception of Harry Dent, who predicts much lower gold prices. We're also not forgetting yesterday's video and Andrew Maguire's prediction either, though, as we've already said, we do not believe it will have the dramatic effect he forecasts. And also we suspect that not all of that policy will be fully implemented until at least January 2022. So what is our assessment for 2021 and the conclusion of this video? Well, we have difficulty seeing gold fall back considerably from current levels. There is a potential for a drop, which would be at the extreme in our view, to $1,600. And we see an extreme peak of $2,300 at the other end. Though we are more comfortable in forecasting that gold's rise is more likely to peter out somewhere between $2,100 and $2,200. We believe the main trading range for gold will be somewhere during the course of the year between $1,700 and $2,000, though it will be higher in the early months of 2021, in other words, the first 3 months. It's interesting to note that CMC Markets have published that 73% of CMC client accounts with open positions on gold for February 2021 expect the price to rise. And frankly, it is difficult to argue with this. Now, for those of you disappointed with our assessment, thinking perhaps it's too bearish, please bear in mind we are looking more positively for gold over the next few years, and are still predicting a rise this year, albeit a more modest one. As best as we can ascertain right now, we can still see a rise in the gold price for the year of between 5 and 10%, which will give us a closing price of somewhere between $2,000 and $2,100. Still a positive result. Bearing in mind, ultimate low, $1,600, though we doubt it'll go that low, but that's our ultimate low. And we predict our ultimate high of $2,300, though if we have the growth rate at the highest rate since 1979, you could potentially see a blip up to 2,500, though we are not expecting that. In spite of our positive position on gold, we also have to bear in mind that unless they collapse beforehand, both equity markets and Bitcoin and cryptos will be competing for investor funds, with both those markets still at record highs or close to record highs, and many argue have much further to go, especially Bitcoin. So that's our conclusion for 2021. Perhaps more bullish than some predict and more bearish than others. Naturally, for our own selfish reasons, we would love to see gold reach $5,000, $10,000 or even $20,000. But frankly, unless the dollar really does collapse or there is an economic reset, we cannot see this occurring anytime soon. And certainly not in 2021. But we admit, it's also not going to be all roses and chocolates either. What do you think? Please do share your thoughts. Tomorrow we will be publishing our silver forecast, and then on Tuesday, the video we were going to produce today, Bitcoin versus Gold and Silver, episode 5. Finally, thank you so much for listening, and if you haven't already done so, please subscribe to our channel. Not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.